Hi, Mark Anderson here, mortgage banker at Paramount Bank. I do lend in all 50 states, and I would love the opportunity to earn your business. Please feel free to give me a call or shoot me a text anytime. Today's rate update, I'm going to go a slightly different direction. Rather than walk through the minutia of what's going on in the market today, I'm going to give a brief summary of that before going into maybe what I think might be some more important considerations of how this virus is impacting the way we are getting mortgages done in today's environment. Briefly, from a rate standpoint, rates are slightly worse today. The underlying aspect of what the Fed is doing, this blank check that they've written to keep the bond market liquidity going, that's still going on. Pricing is only slightly worse than yesterday. So I'll provide a more detailed update on what's going on in the markets tomorrow. I really thought that it was very important at this point to cover what I'm calling the key impacts of COVID-19 on mortgage transactions. So I'm going to go through three key aspects of the mortgage process and how that's currently being affected by the virus. So the first thing we're going to talk about is appraisals. So the appraisers were already getting deluged with orders for refinance transactions. It's typical, say, in my home market of St. Louis, Missouri, that an appraisal would take 5 to 7 days under normal market conditions. A couple weeks back, with the deluge of orders that were coming in, the appraisers already were raising their hands saying, look, these orders are going to be more like 2, 3, maybe even 4 weeks in some cases in order to get them turned around. And that's just a function of the amount of volume going in and the amount of orders that they were having to take on. Now, what's complicated this further are a lot of the orders from a public health standpoint that non-essential folks are not supposed to be out there really engaging in business, especially when that involves interacting with people, especially when it involves going into people's homes. So here's what's happening. We're running into a very kind of strange and frustrating problem associated with this because, on the one hand, the mortgage rules are set by the big agencies. So Fannie Mae, Freddie Mac, FHA. They are the agencies responsible for setting the rules. The rules right now were written in a pre-COVID-19 world, and those rules require, on the vast majority of appraisals, for the appraiser to go inside the home and take pictures of the home to identify if there are any characteristics of the home that might be problematic in terms of structural problems that might be there, et cetera. So those rules that the mortgage agencies have are currently in conflict with, say in my home market, the St. Louis County is basically said that this is not supposed to be taking place. And the appraisers have all kind of gotten together and said, our interpretation of this is we're not supposed to be going into people's homes. So we're in an impasse. And the impasse is the agencies say you need an interior inspection. The county says they can't do it. So fortunately, although nothing is set in stone yet and nothing has actually been finalized, it looks like the rules from the agencies, there is a very strong chance that there is, at least on a temporary basis, going to be some sort of modification in terms of what the appraisal standards will be in this time frame. One of the ideas that's been floated out there is that appraisers will do an exterior-only appraisal. And for pictures on the inside of the property, I've heard various ideas of how this is going to go, but it's possible that the homeowner, the real estate agent, as long as the pictures can be supplied to the appraiser, that perhaps there's a way of getting that done and the rules will be modified on a temporary basis to allow that to happen. I think this is going to happen. It's going to have to happen because if appraisers can't do these appraisals, everybody's on a 45 or a 60-day rate lock. And on the vast majority of transactions, we still need an appraisal. And I do think that the agencies are going to put something in place. But there's nothing set in stone yet. So it's something to watch out for. The next big key impact, I had to make a set of kind of uncomfortable phone calls today. Fact is, the mortgage guidelines do require that if there is any change during the process for an applicant's job or income, that those changes need to be disclosed. And if those changes involve, maybe your hours get cut 50%, maybe you lose the job entirely, there's unfortunately nothing written into the guidelines that allows us any flexibility on this. And if there is an interruption in the job, if there is an interruption in the income, that is going to impact people's ability to qualify. Now, these situations have to be handled on a case-by-case basis. And this is the time where it really pays to be working with a good, hands-on loan officer that's solutions-oriented. What I've done for a couple people, I did have a couple folks that just outright lost their jobs. Now, fortunately, in these couple cases that I'm thinking about, the co-applicant is still at work. And we were able to get these loans approved just on the basis of that co-applicant's income. It's very important that if you know as a borrower, if you have a transaction going on right now and you're kind of maybe hoping that the lender isn't going to find out, or maybe there's going to be some sort of modification in the guidelines to allow for this calamity, I don't see any of that changing. Fact is, loans are about risk management from the lender's point of view. And if we have an applicant that has lost a job, this isn't a decision by Paramount Bank. This is the decision of the mortgage agencies that write the rule book. And I don't really see these rules getting loosened up even on a temporary basis. So this could be a problem. Main thing that you need to do is get with your loan officer as soon as you know that there may be an interruption in your income or if you have outright lost your job. There is some possibility that, particularly if you think you might have another job lined up, we could in theory keep the lock active. That could delay the transaction depending on the timing of that, but you really need a hands-on loan officer to help you through that situation. The last thing that you would want to do is to not be upfront with the lender. We have all sorts of mechanisms that are in place. There are, essentially day before closing or within 3 days, there's supposed to be, in most cases, at least a verbal verification of employment with the employer. Last thing you want to do, particularly on a purchase transaction, is to be keeping your fingers crossed, hoping that call doesn't go through, that call doesn't happen. Because it will, and it will have a very strong likelihood of pulling the rug out from under the transaction. The next aspect here, key impacts, closings. Well, how in the world are we supposed to do social distancing and closings? For my local transactions, I make it a point, it's actually a point of pride, I go to my closings. I think it's important to be there. It's important to cover the documents in detail, to be there to answer questions. It's a stack of stuff like this. The idea of somebody sitting there and having to flip through all those and figure out what in the world they're signing, that I don't like. So I do want to be there for the closing. However, given the social distancing guidelines that are in effect, we are going to have to make some temporary changes to the way that these closings work. Different title companies are handling it differently. There's one title company office I know of that's actually set up with a video conference link where a client will go into a room that's been freshly sterilized and cleaned, and that client is in the room by themselves, but the title agent is in another room with the same set of documents, and they're able to go through them. I'm going to be doing something similar with my clients, whether they're here local or whether they're outside my immediate market area, because I do work with a lot of folks from around the country. But long story short, there are going to have to be some accommodations made for this environment that we find ourselves in. And it's definitely not going to be the case that you should expect to go to closing and have your realtor in the room, have the title agent there in the room, have the loan officer in the room. You may need to be prepared for kind of a more remote style closing experience. No matter what, your loan officer at a minimum should be willing to get on the phone with you as you're going through the documents. This is something that I'm going to do for all of my clients. I'll have the same stack of papers. You start on your end, we go through them, and I'll cover the transaction just like I normally would. But this is just something to be prepared for. The last thing I'll say overall is that this process and how it's impacting the way that we do business. My company has made a really firm commitment that we are doing business. We're not slowing down. We are not going to delay people's closings if we can at all avoid it. And we're going to do everything we can to work through some of these obstacles. Be prepared, though, for a loan experience that is going to be different than your typical loan experience. The appraisal process is going to be different. Right now, we're still waiting on what exactly is going to happen with some of the rules there. Again, if you lose a job or if your income is interrupted, the best thing that you can do is get with your loan officer on that to try to strategize to see if there's a game plan there. And then finally, of course, the closing itself, it's not going to be that same one-on-one personal experience, but there's some things that a good loan officer can do and a good title company can do to try to mitigate that as much as possible. There are a million other aspects of this. It's going to be ever-changing. I'll have news on this that I'll share as soon as I have it, particularly on the appraisal issue. I'm really going to be curious to see what the agencies do on that. If you have any questions, again, feel free to call me anytime. If you'd like me to price out your scenario, whether it's for a refinance or a purchase, I'd be happy to do so. Thank you so much for watching.